Welcome to Top Line, the podcast for the best founders, operators, and investors in B2B tech. Every week, AJ Bruno, Asad Zaman, and me, Sam Jacobs, will break down what's important for you to know to be the most well-informed professionals in the market.
This episode is brought to you by Attio, the AI-native CRM built for the next era of companies. Connect your email, and Attio instantly builds your CRM right before your eyes with every company, every contact, and every interaction you've ever had, enriched and organized. With Attio, you can build AI-powered automations and use its research agents to tackle complex operational processes like finding key decision makers and triaging incoming leads. Join industry leaders like Flatfile, Replicate, Modal, and more. Just head to attio.com/topline and you'll get 15% off your first year. That's attio.com/topline for 15% off your first year. Now back to the show.
Hello, everybody. It's Top Line 104, Sam Jacobs, CEO of Pavilion, Asad Zaman, CEO of Sales Talent Agency, AJ Bruno, CEO of QuotaPath. We are talking to you live from a week where there were tariffs, there were no tariffs, there's some tariffs. The market was down big. It was up huge yesterday. It's now down huge again today. Who knows what's going on? The word of the day is volatility. But before we dive into that, how are you, AJ? How's it going?
I'm fine.
He's just been having a good 2 weeks.
Okay. We'll unpack that later. Mr. Zaman, how are you?
I am really good. I am good. I feel excited to talk about all this stuff with you guys. And we made the decision to do this on Thursday. So we're recording on Thursday, April 10th, I think it is.
Yeah, it is.
Rather than our regular Tuesdays, because we realize that the world is changing every single day. And so the episode drops on Sunday. Let's record as close to that as possible, which I think was the right decision.
Absolutely. Yeah. There was a minute because we're doing all of this, we can talk about it, but we're doing like this weekly pulse survey at Pavilion, and we're doing weekly webinars. And there was a minute yesterday when the market roared back, and I was like, maybe we didn't need to do any of that stuff. Maybe everything's just going to be back to normal. But I don't think that's the case. I think who knows what's going to happen tomorrow? Nobody knows anything.
Sam, you also skipped over a few minutes a few days ago where there was a tweet that people thought indicated that the pause was coming. I think it was Monday, Tuesday, and the market shot up 5-6% then as well, and then quickly dropped back down. So it's like complete craziness right now.
Really easy to invest in this environment, isn't it? When you have no idea what's going to happen from day to day.
My brother has been he called it his like Trump investment portfolio. He took like $100 or $200 and was just making a lot of bets, and it was up to $3,000.
A lot of bets with $100, $200.
Well, this is where you don't get into puts because he lost 95% of it yesterday with a put.
God.
Yeah, don't do that. This is kind of like our very first episode where we were talking about SVB. It feels very similar, my friends.
Yeah. We weren't doing it during COVID, but it feels anyway. I don't know. COVID felt the same, but we had the benefit of supportive Fed.
Yeah,
and I don't know that
we're not going to get that
support of the central banks this time to juice some things.
Stimulus checks this time around.
I know. That was at first it was terrifying, but then it was quite fun.
In Canada, we had this thing called the rent subsidy where they paid for our office rents for a while. It was very nice.
That's great. All right. Well, what's on the docket, Asad? Let's get into it. Top line, the 104th episode of the three of us getting together and kibitzing.
Well, Sam, what we just started talking about was what's been happening in the market. So last week, they announced the tariff policy, which everybody knew tariffs were coming, but Obviously, no one knew the extent to which they would come, and they were quite aggressive to the point where a bunch of poor penguins on an island with no humans had to also endure a 10% tariff. They might have some foresight. Maybe they know something about penguins that we don't know. Maybe
They're
these
rapidly
penguins are going to start
developing.
trading fish. They're good fishers. I don't know. But we had tariffs go across the board, aggressive. And so over the next 2 days, we had the largest 2 day drawdown in market history. We lost about 6 trillion worth of value in the US market. And then obviously there's a lot of anxiety in the market in the following days. And yesterday they announced a 90-day pause on the majority of those tariffs. And the market shot up and it had the largest 1 day spike in history. And then today it's down again. The S&P is down 5%. So
6%. 6%, Asad.
6%.
I'm
It's
looking at it right
plummeting
now.
as we speak.
So 6%. So basically, I think there are a lot of people that are going to talk about why tariffs, what's the reason, what does this mean, where's this going? I think for us and our audience, what's probably most interesting is to talk about what this really means for operating a business in this type of environment, which is an extremely volatile environment. And it's not just this period, right? Like if you look back, you had this period of stability after the great financial crisis. It was relatively chill times. And then we had COVID, then we had ZERP, then we had inflation and interest rates, and the market came down. We had a minute of stability in 2024, and then this is happening. So volatility seems to be the steady state today. And so we're going to talk about how to operate if volatility is your steady state. But before we jump into that, Sam, why don't we just get a read from you as to how the last 7 days have changed your thinking or informed your thinking about the next 12-ish months? What do you think it plays out like?
Well, I don't know. I don't know. I think there's been what am I going to say that's interesting? Here's what I have some data. How about that?
Yeah, I was going to say, this is like Sam's pulse survey right now.
I'm looking at the pulse survey.
Give us the pulse survey.
I'm looking at it right now. In light of current economic stability, how has your company's 2025 revenue forecast changed? And under half, so 44% of people said no change. So my point is, in response to what's happened over the last couple of weeks, 56% of people have changed their forecast, and 40% of people have modified it down. So additionally, we asked the next question: how confident are you that your company will meet its 2025 growth targets despite the current economic environment? And only 28% of people are confident that they will hit their number, which means that 72%, 71% of people are not confident or are unsure. And I am one of those people that are unsure. It's not that I'm not confident. I still don't know. And then the next thing I do is I go over to data on our cancellation requests, because the nice thing about Pavilion is it's effectively a e-commerce business in many ways, and so we get real-time data on what's happening. And this week, 61% of the cancellation reasons are related to the economy, the cancellation requests, which is much higher than normal. And but we haven't seen it as much show up in the enrollment calls. When we have some AI that tells us what people are talking about and what the triggers are. I will say the reason I'm not just universally listen when he paused, when the fearless, our fearless leader, and when there's so much to express frustration about, regardless of your political affiliation, the fact that Congress is really the body in our government, the branch of government that's supposed to be able to impose tariffs, and they have the power of the purse, as the framers said, and the fact that this guy can decide if he wants to drive our economy into, over a cliff or not, or just like not understand what trade deficit means, which is like when rich people buy more stuff from poor people and poor people buy from rich people. That's not necessarily a bad thing. And there's nothing that needs to be like balanced there. I mean, unless you want to send money to the poor people. But my point is, so first, when he paused the tariffs, that gave me some reassurance that he's not a nihilist. you know, that like he is responsive to a certain degree to market feedback. You know, we've always said that Trump cares most of all about the stock market.
No, he cares about Trump.
He cares about Trump. But he's got money in the stock. For him, his popular, like there's the Gallup approval poll probably, and then there's like what's happening in the equities markets. And then, no matter what happens for now, they do have a lot of pro-growth stuff that should play out over the next couple of years, and they're trying to push a major tax cut this year. He's even floated the idea of no capital gains, which is totally insane. But if he does all of those things, maybe those are tailwinds in the second half of the year. I don't think he has much of a plan, to be honest, and I don't think there's a lot of strategy here. And I don't think he understands general economic theory, which is great because he's at the reins of the largest economy in the world. So that's fantastic. All of that is to say, I am marginally less optimistic. How could I not be than I was 1 or 2 months ago? But I don't know what'll happen. And I think with some tax cuts and maybe he cuts a deal with China and maybe the markets roar back, that could happen. Or we could be in a prolonged period of economic malaise. The last thing I think is, as I've written about, I hope, I don't know for sure, I do hope that this emboldens Europe. I feel like maybe this is a kick in the tush to Europe to rise to the occasion and maybe introduce some pro-growth measures and establish some degree of autonomy and not just be effectively, this is hugely controversial, but nevertheless a tax on American innovation. There are great companies being built in Europe. Manny's building paid in Europe. There's great companies here in Barcelona. There's great companies in Europe. So my hope is that Europeans, get some moxie, get some fuel, get some animus. But we'll see.
AJ, the data Sam spoke about is really interesting. It's super live data, right? When did this survey go out, Sam?
It's still live, and it went out 2 days ago.
So this is like as live as it gets. Okay.
It is as live as it gets, and I will tell you that
it doesn't have my responses in it yet. That will fundamentally change the survey.
Indeed, it will. It was. I will tell you that when it first went out, the numbers were more optimistic.
Oh, interesting.
And the number of people that said no change, forecast remains roughly flat, was well over 50%, and now it's 44%.
Your pulse survey isn't dynamic enough. That's hilarious. It's not as real time as it needs to be.
AJ,
I think look, this is all just happening. We're all trying to learn about this together. None of the three of us are going to pretend like we're economists. I was an econ major, but at the great business school of Penn State, Smeal. So yeah. But there is a couple things that I think about that I remember back to. And one is,
weren't you an astrology major?
Astrology? Yeah. I love Capricorns. Astrology? You mean astronomy? Astrology major. Wow, Austin.
You wrote a thesis on Capricorns.
Yeah. CEO.
Enigmatic.
27% of all degrees. 27% of all degrees of CEOs are astrology. I don't know if you knew that, but that's a fun fact there. Astrology. I was not an astronomy major, mostly because I couldn't handle the calculus and the math. So I loved astronomy, but not an astronomy major. I think about two things: the strength of the dollar, and that's been a huge for the last 40 years. The strength of the U.S. economy has really been backed by the dollar. But then also look at like equities versus bonds. And that was a really interesting data point yesterday, where typically, you sell out of equities and you go immediately to the safeness of the treasury. That didn't happen yesterday. And there's a lot of theories. Okay, China owns $700 billion of the US debt. They're not going to immediately move their money around. There's also just the idea of like, is the US dollar the beacon that it once was? But if you look at the alternatives, you have what? The euro, you have Bitcoin, China. And so I think there's just not a lot of great alternatives right now either. So that's something to watch out for. All of this to say is this is very, very, very complicated. Consumer behavior and sentiment is super nuanced and complicated. I have complained about our Q1 and the ending of our Q1 last week, I think it was a little bit of a canary in the coal mine situation potentially, and something to watch out for, because we did get a lot of, hey, I'm really worried. Like, we're not going to do anything. We're freezing this. We're freezing budgets. And look, Austin, we're going through an active recruitment cycle with a bunch of roles. One of those, the VP of Customer Success, and working with STA on that. And I woke up in the middle of the night last night saying, should I just freeze all hiring? And that was the question I asked myself. I'm not going to do it. And I had to sit down and write down very securely, what are we doing? Who are we in service of? How are we helping our customers? Okay, then I'm not going to do it. But I did wake up with that immediate thought last night.
That is super interesting.
I will just to underscore what AJ said. There's a free text part of the survey, and I don't have a word cloud or anything, but I was scrolling through the answers, and what's the word that pops out? Delay. That is the word. That
uncertainty.
It's not closed lost. It's freeze. We just don't want to make a decision right now. And as everybody will tell you, every thought leader, quasi thought leader, markets hate uncertainty. They don't mind negative information or positive information, but they hate not knowing. And we don't know right now. And
aggregated delays correlate with the lack of growth in an economy. If everybody delays everything, then growth comes down, and negative growth is a recession, which is obviously interesting to think of it from that perspective. One thing, I don't know the science of what is going to play out or not play out. There are economists out there who would be better at speaking to that. One thing that gives me some solace is that they do like power, and they want to maintain power. And there's a midterm election coming up. And the midterm election is one that if they lose, then that entire scope of what they want to get done gets reduced, because you get this gridlock. And so they need to do things now and then have a good story to sell and some time to sell it to be able to win those elections. And so that's one way to that makes me feel a little bit better, that this won't be 4 years of insanity, that this might be, they're trying to do the most aggressive stuff now, but then even after this aggressive stuff, they might have some things they want to do that are a good story to tell. Some of the taxes that they want to cut, and maybe that's good for the markets. We shall see. But it makes sense that so many people are feeling anxious, A, and B, are starting to think about, well, how do I change how I operate my business because of that? So maybe let's click into exactly that. How should we be thinking about things like cash, things like our customers, things like our teams in the context of all of this? And I want to frame this as, if we're saying volatility is the new steady state, then to navigate volatility, you need two approaches. You need defensive approaches that secure your foundation, that give you the luxury to then sometimes attack as well during moments like this, because that you can attack and you can have some wins in moments of volatility as well. So let's talk about defensive strategies first, and then move over to, if you have fortified your business, how do you think about attack? And so AJ, in the context of cash, if you're thinking of defending your business in the face of volatility, what comes to your mind? How are you thinking about this? And could you extrapolate that out to other venture-funded businesses? Things like runway and cash management. What strategies do you need to implement, and what type of timelines do you need to have?
Here's the good news, and I got to credit. Sam's been a market leader here, a trendsetter, if you will. The profitable and efficient growth messaging and how that relates to being a wartime CEO, those are things that the three of us have been operating in that mindset for a year plus, right? And when we had this situation happen, I'll use COVID as an example, everyone kind of freaked out. And in 2023, after ZERP, we all had a glutton of things that we had to offload. Yeah. Do our companies have those today? No, because we've had to rebuild stronger, and we've had to actually think through and make these decisions on trade-offs, on costs. We had to become, venture companies have had to become more PE. They've had to become thinking about these trade-offs and not growth at all costs, and not spending a wild amount of money on SaaStr or whatever marketing related event that you're going to. $180,000 for SaaStr. No,
What?
that's not going to, I didn't pay that. That's not going to
Is that
happen.
how
But
much it costs?
I think there were definitely companies that
for a
had,
booth, for one
yeah,
booth.
there were companies out there. We paid 80,000 for ours, for our booth.
Did they put you next to the bathroom?
Next to the exit gates, I think actually is where Lemkin put us.
I mean, I don't know. 80. That's all got to be, value. Well, this is your point, maybe in the context of ROI. That's how we should think about it. 80,000 can be a lot if you get no leads.
But we weren't thinking about it then at that time.
Right.
You just kind of had to do it because Captivate IQ is going to be there.
This is
or
true, by the way. For a
Smith was
while,
gonna be there.
strategies were like you just had to do it. You had
You
to
just had to
hire a
be there.
COO when you hit this certain stage. You had to
Just
go
had to
and
do it.
advertise here. You just had to. Like, man.
Yeah, why? And I mean that became the norm, but that's just so changed overnight. And so actually, I feel a little bit more predictability and certainty in my own business than I do in the macro, and that just gives me security of like we're gonna make, until something really tells us otherwise, and we have to make a major change to the business. Then we're fine, and we can continue to monitor it and make smaller trade-offs.
AJ, let me click into
We haven't
that.
delayed anything, by the way, for the record. We haven't delayed anything that we're doing so far.
Yeah, neither have we yet. We just feel like there's not enough information to make decisions.
Yeah.
Let's gather more information. AJ, two questions. Number one, if you're a standard venture funded business, how much runway should you be optimizing for in moments of volatility? A. B. How do you go about forecasting and budgeting? What type of cadence are you using over there, and any rules or principles that I think would make sense for a venture funded business? Because these two things are different. Maybe not the second one, but the first one is different for a non-venture funded business, and we'll talk about that.
24 months. And
wow.
And I also have just really reversed coursed, and I've like gotten really excited by our burn multiple continuing to come down. And I'm really excited about the possibility of profitability. And I don't think, okay, I've got a crazy stat for you guys. I have never worked for or run a cash flow positive business in my 20 years.
Wow. That's so crazy.
Dun, dun, dun. I'm sorry. Yeah, true story. Meltwater was never profitable. Trendkite was never profitable. QuotaPath hasn't had profitability yet.
Wow.
I've
So
had 3
you've
jobs.
never been in a business that has generated $1 of profit.
Yeah, what does that say about me?
That's crazy.
AJ, what's your ROI on businesses?
It says that you play the game on the field, as Parker Conrad would say.
And that is the opportunity, but how do I live in a world where I've never been a player on the field for it? I've always watched someone ride the bike, but now I have to step in and actually make it happen. And that's the truth. I do have to do that, and I want to do that, and I'm excited to do it because it's a learning and growing opportunity for me. So Asad, kind of similar question in a services world where every year you come in and you're like, I have $0 of revenue.
Yeah.
Well, how do you think about that as well from a runway cash position in this type of world?
I think different people that run businesses like mine have different views on this. I think you need 3 to 6 months of runway max. Like, I don't think you need more than that. And the way that I think about this is that the first thing you want to do is one of the things we've done that I think others should do a lot of as well is, in a services business, you should have much higher variable costs than fixed costs. The worst type of services business to run is a high fixed cost services business. Like, that is just a headache and a half. And so you're trying to minimize risk by putting more on the variable side. But there's a trade-off there, which means that if that's the case, in the best of cases, your upside as a business might be a little bit more constrained, because to give the risk to the other person to take the variable, you're reducing your upside. But that's a trade-off you should be willing to make, because if you're saying volatility is consistent and constant, you want that flexibility of the cost structure. So that's one. I think fundamentally you need higher variable costs than fixed costs. The second thing you want is you want to understand your break-even number. And you're not going down to zero, but this enables you to have enough cash flow to say, okay, I have 3 to 6 months of cash flow, but if I need more than that, if I need to fund this business for more than 6 months, that seems really off. But what you can do with 3 to 6 months of runway is you can further reduce costs down by doing aggressive things to extend it out to 9 months if you need to. I just don't think, why are we running something that needs 9 to 12 months of funding? It doesn't make sense to me. So that's how I think of cash flow. That's how I think about the cost structure. Sam, you run a similar yet different business. How do you think about these things?
He's in between. He's going to say 12 to 18 months.
I mean, I'm trying to be profitable. So
No.
how much runway do you need? I think you need 18 months.
Yeah.
Wow.
I mean, I listen, if you're an unprofitable business heading into a period that could be a recession and you have 3 months of runway, I don't understand. Asad, is your point that you're a profitable
But I
business?
am profitable, right?
No,
Like,
you are
I'm
profitable,
Yeah,
right?
exactly.
So when you say, you mean 3 months of like operating expense burn. That's
Rainy
what you
day
mean.
fund.
Yeah, rainy day fund. Like if things went to
If
zero,
revenue goes to zero, what is
Yes.
your monthly spend? Okay, well,
Yeah.
good. Okay, that's different.
Yeah.
Somewhere between 3 and 6 months, right?
Yeah.
I think that's about right. In terms of like continuing to operate on an ongoing basis, I think you need 12 to 18 months if
Yes.
you're not profitable.
Yeah.
I think yeah, I mean, I'm just looking at the research that we did because it finally generated for me. Asad had all of us do some deep research using ChatGPT.
No, he didn't have all of us do it. He came up with the prompt and just
Yeah, all he
expected
said
that
was,
we
"Here,
know.
use this prompt," and it was very strange because, like, well, why you won't show us the results? It's a secret. He's like, I'm running a test to see if it comes back with different answers. I'm sure it did, but I think the point is, on the one hand, I mean, there is a strong argument that we're entering a sustained period of consistent volatility.
Yes.
We that's the whole point. I mean, that was why Trump was elected. That's why every incumbent lost. Well, you could say it was because of inflation, but you could also say that people are trying to rearrange the global political and economic order fundamentally. And if people are talking about, disrupting or reducing the emphasis on NATO or Americans spending less on foreign country defense, meaning we don't provide the security curtain for Germany or for Europe, generally speaking, and they need to, like, these are all fundamental transitions that increase volatility. And so what do you do in that case? From a defensive perspective, to your point, Asad, you need forecasting and scenario analysis, right? You need to know what's worst case, what's best case, what happens if nothing goes right from here on out, and do we still get to be a company? And then and I think one of the things that it says is delay big capital investments. And I think it's sort of a function of like, well, what does that mean? I mean, building a power plant is very different than hiring a CRO or hiring a VP of customer success in AJ's case. And because the other part of me like, there's a part of me at this point, and maybe you both can check me or the world can check me, because I don't want it to be impatience. I don't want it to be like, fuck this. I shouldn't swear. I'm sorry for swearing. I don't want to say F this noise and just lean into growth because I'm bored, because I'm tired of being defensive. But I feel like we've been defensive for freaking years now.
Yeah.
And when I look at the revenue trajectory of Pavilion, it strikes me that, yes, we did burn a lot of capital in 2022, but that also created the plateau of revenue that we currently basically sit at. Now, the revenue mix is different and it's much more profit. It's a much better revenue stream. And yes, we are profitable now, but when you invest in growth, you do grow, you do grow. And so part of me is thinking, on the one hand, profitable, efficient growth. What are the fundamental parameters of it? Like, what are the foundations? The foundations are not don't grow. The foundations are data. It's measure twice, cut once. It's tranched investments. It's spend a little, see what happens. Spend a little more, see what happens. Spend a little more, see what happens. That's the mindset I'm in. If everybody else is hesitant, is nervous, is cautious, I want to increase my paid spend. I want to hire a couple more enrollment managers or AEs. I want to keep investing. Now, I'm not going to do it so aggressively that I'll have to do layoffs later.
Yeah.
It's not hiring 5 people, but but again, this is why it has to be a data-driven decision, because emotionally, that's just where I'm at. Emotionally, I'm just tired of being defensive and I want to be offensive. And there has to be data to support that emotion inside of me.
Well, I feel like there was, at least in the context of our business, I found that in the previous moments of volatility, our foundation required work. Like we needed to do certain things that we have now done. Our fixed costs are much lower than our variable costs. We're twice as profitable as before. We have re-engineered the business to be focused on the market segments that we think are more exciting to go after, irrespective of market conditions. And so right now, actually, one of the conversations we had last week internally was, let's be thoughtful, but let's now attack a little bit. We do want to find, because there is opportunity in volatility. You just don't get to take advantage of that opportunity if your business is in an extremely vulnerable position. And so you have to do the work to give yourself the luxury to then do that. And I think we've all gone through such change in the last couple of years that we might be finding ourselves in that position where the instincts of like how to even think about the bets are better. Like I think now instinctively when we think of bets, we think, okay, is this a measured bet? Is this timed right? Are we observing where it's going quite seriously and making adjustments if we need to? Like the instincts have developed to be able to fight this fight, which I think is interesting. In addition to cash, the second thing is from a customer's perspective. So what do you do to secure yourself from a customer perspective? AJ, you are a venture funded business that has recurring revenue and long-term contract, all this stuff. What do you think customers look for, need to see from vendors, especially in volatile times? Do you do anything different when volatility is high?
I mean, you continue to focus on customer value. I think this goes back to what I just said, where we went through this bloat. We had a glutton of tools that we didn't use, and a lot of those churned out. And I think companies, to Sam's point, like we have good revenue. I think similar on the SaaS circuit, there are a lot of organizations that have done the out with the old, in with the new. I know we have for our ideal customer profile. That's changed quite a bit. And so we've hit more of a steady state on our revenue retention that I think you just have to have security that even though there's going to be some challenges to this point of like what's best case, worst case scenario, it's not going to zero, but there is some level of challenge that you're going to have to bake in and that you're going to just have to understand is going to exist. And that reforecasting point, I'm just going to be curious to see what does that materialize as? Is that companies that are literally going to their boards and saying, hey, we are going to put our down case scenario that we forecast at the beginning of the year in front of you as our base case now? Is that what happens?
It'd be crazy if they did it today, though. Like I do think everyone needs more information. No one has a complete.
No one's doing this until July. I will tell you, or if you're on a normal fiscal year, you're not reforecasting the first half of the year. Wow. Would be my guess.
That's longer than I thought. Yeah. Sam, I have a question for you. I'm a venture funded business.
I might have a question for you back.
Okay. Let's do this one, and then I'm happy to take yours. So I'm a venture funded business.
My question is this: what are you wearing underneath your shirt?
Nothing, obviously, and under the pants as well.
Where did this question come from? Where did this question come from, Sam?
Oh, I'm just being, just what's like the weirdest.
Sam's the purest cat. Sam's the purest cat. Okay, so I'm a venture funded business. It's volatile and I feel like I need to cut some costs. So I'm going to do some layoffs and some other defensive moves that the market will notice. My customers, I'm worried, are going to think I am now not a dependable company. I'm going through too much. What is happening? I am going to feel nervous working with this vendor. I'll take a call from their competitor. I'll look at some other options. How do I not increase my churn risk by defending my business in volatility? What do I do here?
I think the first of all, before we start being defensive, let's do what we can offensively. Maybe that's not conventional wisdom. My point is, have you changed your messaging? Have you done everything you can to explain why your solution is absolutely critical in this time of uncertainty before we just, acquiesce to the idea that we have to make cuts? I think it's, hey, this is why our solution is more relevant now than it was before. Certainly, I think that argument, everybody wants to make that argument for my business, for community. I certainly believe that it is very valid. We grew more during COVID than at any other time. And that's partially because people were isolated and alone. People were getting laid off, and we tried to respond very quickly and very aggressively. So that's what we're doing right now. I think if I'm thinking about cuts, putting aside the messaging, what I would probably, where my mind goes is what we've talked about in general. And so what have we talked about in general? Increasing GTM inefficiency, higher customer acquisition cost, powered by improvement in operating efficiency, using AI and technology and offshore support to layer customer success, customer support in at cheaper levels than it was before. So if anything, I might pull forward my interest in hiring a team in Argentina or the Philippines or Nepal. I might pull forward my interest in testing out AI customer support agents or doing some kind of avatar stuff. Like I said, I will do it if I have to. And if I'm presented with the data that, return on ad spend's falling off a cliff, that conversions are falling off a cliff for reasons that have to do with the economy. But I really don't want to pull back from some targeted growth investments right now because of the game theory that other people will. Right. And I want to, even if I grow 5%.
Even Sam, if they do or they don't, if you are just saying that volatility is here to stay, because what is volatility caused by? Geopolitics, macroeconomics, technology. Take geopolitics and macroeconomics out of it. Just say AI. Do you believe AI is going to be disruptive? If it is, it'll be volatile. And if it's volatile, I can't sit still for 5 years. I'm going to go crazy.
I want to grow. I think the thing that is, listen, there's a lot of bummers. And I appreciate, all of the other considerations around debt and around the national debt and around the skyrocketing costs and how inflation and rising interest rates have ballooned the cost of our interest payments, and that we are, robbing our future generations to enjoy our lives of luxury today, and all of this other stuff that Ray Dalio wants to lecture me about, and Freeberg wants to lecture me about. But my point is, the collapse of the equities market sucks for a bunch of reasons, and one of them is that M&A activity, to the extent that there was some animal
that it existed in the first place.
What'd you say?
That it actually existed in the first place.
It seemed like it was coming back, and Google is going to buy Wiz. Think about, it's the same reason like you don't want a margin call right now. You don't, if you've got debt with your broker, you don't have to pay it back when I don't know what the prices are, but if Apple's at $100, it's way easier to pay back a loan than when Apple's at $50. And Apple feels that way too. And if there was an acquisition that Apple wanted to make, or Google wanted to make, or HubSpot wanted to make, or Salesforce wanted to make, and both HubSpot, Salesforce, companies in our space that are public, Adobe, those are all possible acquirers of QuotaPath, or frankly possible acquirers of Pavilion. STA I will put to the side. But my point is, they have less money. If they want to do an all stock deal, that deal is worth 20% less than it was a month. And then if it's a tech stock, it's worth 40% less.
Yep.
So all of our companies, people say the stock market's not watching Republicans dance around the stock market's not the economy. There's a difference between Main Street and Wall Street. It's like many
totally different, singing a totally different tune than in 23. The stock market went down 22%, and like all of the pundits out there were like, "This is awful, dire."
The stock market is the economy. I'm sorry. Yeah. I think that's what it is. I think it's highly reactive, and as they say, in the short term, it's a voting machine. In the long term, it's a weighing machine. So I think it's overreacting and it's jumping around on any given day. But it is what it is.
The
is
10-year was the adult in the room. As soon as the 10-year went up, they came and they announced the pause. Like the 10-year was
because it
rising,
means
right?
this whole idea that you're going to use it to, you're going to drive the
Yeah.
economy into a recession so that you can have lower interest payments, which is totally insane.
Doesn't
that
make
was
sense.
crazy. That's crazy.
Makes no sense.
So my question
Or
to
like
you,
the
Asad,
idea that like we have this asset. This was Chamat's point that like there's 50% of people that are asset light, and so the cheaper assets are good for them. It's like, have you ever hung out with a person?
No,
who
they have no
makes
idea. They don't have a clue.
$45,000 a year?
Shamat unironically used the term globalist in a tweet. I just cannot. It's like this dude is on a yacht in Sardinia every summer talking about how he has to wear, cashmere from Italy, but we're the globalists. Anyway, the lack of irony, just these, and also the lack of self-awareness,
Humility.
yeah.
It becomes really easy to become a propagandist. Basically, is what
When you get invited to the White House, I think you want to
Yeah.
keep going back.
Yeah, you're like, I like that place.
This is
That's
cool.
good.
Going back to something that you said, Sam, in this idea of predictability and volatility with AI, and like we're in a volatile world right now. I don't know outside of the pandemic if it's ever been more volatile than this week. I think this is probably the most volatile week in the history of our lives.
Yeah.
So it's hitting us right now, but I go back to our team. So if you're out there, you're thinking about it in our company, in our teams, a lot of them are very worried and very concerned. And the reason for that is that human beings have traits and things that we need to have. One of those is predictability. We need to wake up at 8 a.m. or, so I said 11 a.m. And we need to make sure that we're doing all the things, taking our kids to school, whatever. And if we don't have that like makes us very, very scared. But then the other side of it is unpredictability or adventure or chaos is a part of it. That's why we join startups. We wanted to like create new patterns. Why? Because that creates progress. That's innovation. And all of the value is built into that ambiguity of what this is. And so we as leaders have to do both and straddle both and lead our team safely into this chaos. But when it's happening every day, it does get exhausting. It is tiring. We do wake up at 3 a.m. and said, oh, should I make changes to what I just thought I was going to do last month? I don't know.
I think the foundation building, the engine building here is so that volatility can be exhilarating to navigate. But I think without the foundation, I experienced this previously, it was anxiety inducing and nerve wracking. And I think which experience you have is based on which set of trade-offs you make and what type of engine you build. And I do think, I was looking into this a lot last night as I was doing my research. Salesforce is a perfect example of a company that played a really good offense and defense game in the 2000 recession. They were in a really tough spot when the recession hit. They quickly cut costs. They decided that their SaaS model is going to offer a CRM at 25% of the cost of Siebel, and they then attacked Siebel. And they came out of that 3-4 year period so much better than they went into it. And they won the category as a result of the work that they did there. But they first did some foundation stuff, and then they went and they attacked. And I think we've all been doing the foundation building for some time. And if you haven't, this is a good time to do it because it's not like volatility is going away.
Here's my comment. I just never. Here's the problem. I was in a conversation that you helped facilitate, Asad, with somebody recently, because I feel I've been doing foundation building since we fired the product and engineering team. So let's say resetting the foundation October 23. Now we're sitting here in April of 25. Do I feel like the foundation is built? Nope. The call before this was our quarterly, or was our QBRs with the internal team. And what I'm hearing from the team is always, we're right around the corner. It's not great now, but it's going to be great. When's it going to be great? July, really Q3, September, October 25.
Sam, don't you know it's always darkest before the dawn? Okay.
I'm just saying, like, you never, as the CEO, you never feel like your foundation. My instinct is always, let me wait a little bit before I start trying to sprint. And somebody said, again, this conversation helped facilitate, Asad, you're never going to be happy with where you have to go. At some point, you have to go, to paraphrase Rumsfeld, like you got to go to war with the army you have. But at some point, you do have to go to war. McClellan's sitting there drilling his troops over and over again. And at some point, Lincoln says, hey, if you're not going to use that army, do you mind if I borrow it? And, at some point, you just got to go. Like, we got to lean into growth, even if the foundation isn't perfect. For me, when I hear what you're saying, Asad, to the point, it's, are you profitable? Now, again, are you profitable at these levels is different than are you profitable if new business goes down 30% and your costs stay the same? And then if you're significantly unprofitable, then things are difficult.
That's why the variable thing is so important for businesses. This is underappreciated because as your demand goes down and revenue goes down, your costs are going down. I know so many people, especially in the services world, who run high fixed cost services firms. Those are the craziest companies to run because your revenue will drop, but your costs will not drop. And when you have lag between customers, like if you think of RevOps agencies or you think of application development studios, these are high fixed cost firms. In the good times, they look great. But in the bad times, it's weeks and months before they die. And so you do need your...
Carabiner Group got destroyed in the downturn.
Yeah.
Before they sold but Michael Ingram's company, In Tandem, he's not even paying me to say this, but I really like the expert network model for RevOps. First of all, because of all the volatility, like in technology, like, you could have Seamus was a Salesforce wizard, but if some new CRM, if it's ADIO or something like that, then how are you going to make sure that you have a credible subject matter expertise? But also, to your point, it's all variable cost. There's a small team in place, and then it's an expert network of 1,000 RevOps experts, so that when you need the HubSpot person, you can find them, but they're not on payroll. So I agree with you.
I think the last vector of defensiveness is around people. And I have a thesis that I would love to get your thoughts on. There's obviously cut the fat and do this and do that and hire resilient people and all the cliches. And the cliches are probably very true. But what's like beyond that? I think the most important thing you can do to defend your business in volatile times from a people perspective is have a core group of high tenure people. These are individuals that are mission oriented. They have been around for some time. They have institutional knowledge. They, I think, are the most important part of your people strategy. AJ, would you agree or disagree?
How big is that? Is there a percentage of that your company that you're thinking about?
Depends on the size of the company, obviously. But I would say, let's say you're a 50-person company. I think you need 5 to 6 people that are high tenure, fully all in. Like they are going.
And they don't have to be on the management team, or
they should be part of the management team.
They all should be part of the management team.
They can be ICs as well. Like I think you need some of them on your exec team, 100%.
Yeah.
But the goal is to have them because they are willing to go to war with you, whereas everybody else is just not there long enough to be like, let's die together. The average tenure of the ecosystem is 2 years. That's why I think this.
It is a constant dance that we're doing, though. I agree with you, Asad, but we're business owners, all of us, and we have just a different level of ownership than some of those people, and we have to recognize that and realize that. So it is this constant dance as a CEO of when do I bring someone into the thinking or the what are my deepest fears and insecurities and vulnerabilities versus hey, let's go into this war room and game plan. Those are two different conversations. And I think to Sam's point earlier of just like, if you're not using this army, can I borrow it? That's the conversation you should be having with your team of like, where can we go on the offensive and what does this look like? Everyone else is going to be turtling up. We have an opportunity, never let a good crisis go to waste. And we need to take advantage of this. It's a very similar conversation to we're having in SVB crisis to the pandemic. But I think our teams and our companies look differently and the world looks differently. AI is there for sure. And we have to be able to take those, use those to our advantage. Given we're resource constrained, a lot of us our teams are smaller than they've ever been. The opportunity is just much, much greater to say we have to be scrappier and hustle more than we ever have. And that has to be the messaging. And that was my messaging coming out of Q1 of look, this is, we failed in these areas. these are the changes that we're going to make, and this is what we're going to expect to look like on the other side of it. And just hammer in that messaging constantly. It has to be a weekly cadence. You have to meet with your team. I just came meeting with an engineer right before this conversation. I have 2 more engineering calls later today, and just really understanding what are they thinking about and seeing that might be differently. And some of them might not be fully on the bus yet. It's your job to either get them off the bus or get them off the bus.
Good news about this conversation with your engineer is he or she definitely doesn't listen to it.
Yeah, for sure.
100%. In fact, AJ, you're the 3rd full-time job he is currently holding down.
That is not true. I promise you that's not true. I promise you. And that, the funny thing is, to Asad's point, your tenure kind of works against you though sometimes, because that's where complacency sets in. Sometimes I have people at QuotaPath that have worked with me for 10 plus years, 10 years. And you just have to constantly evaluate if they're going to be that thought partner and dig in with you, or if it's time for a change.
It is such a good point. There is 2 sides to tenure. Sam, what are your thoughts on the people vector from a defensiveness perspective? How do operators, founders, builders need to think about this?
I tend to basically agree with your perspective, Asad. I think in general, the kind of business that you and I are trying to run, it's a small group of high agency, independently motivated people, and everybody else over time, you don't necessarily have to do it overnight, should be offshore, in my opinion, or AI. I've said this for a long time, but at some point in the next 12 to 18 months, if you can't independently manage a project start to finish on your own, then that doesn't mean you can't work at Pavilion, but it does mean I don't want you to be an FTE. Everybody that's on the core team needs to be able to take, a general direction and execute it violently and vigorously,
I love that.
And that's what I think, and what I want is a small group of people, like the people I was just on the QBR call with. And I want every one of those people to be getting stuff done.
Yeah.
And not asking me how, because I don't know.
I can tell you that we hired a couple of people in LATAM more than a month ago now, maybe 2 months ago. We just had them in Toronto this week. These are 2 of the best people we've ever hired. Like this is not like, oh, we're benefiting from lower compensation, so we have more tolerance for things. No, these are 2 of the most talented people we've ever hired. And I don't know if we would not hire in LATAM for every role from here on out. It just doesn't make sense.
This is one of those people, is this McKinsey woman?
Yeah.
That's great.
Yeah.
Did she buy her Lamborghini yet?
Soon she will.
This guy, Diwas, that does my LinkedIn videos, he's in Nepal. He's in Kathmandu. And he's like, you can get 7 videos for $600.
And he's chilling with $600.
Oh,
like he's living the life, Sam.
And he's such a hustler too. He's like, hey, you've got this package, but would you like to upgrade? Just let me know. It's no problem at all. We could add it to your bill.
I want that. That hustle. I love that.
This, by the way, this is also tied. I didn't read the article yet in the Wall Street Journal. But I will after this. Is about services, and there aren't obviously tariffs on services, but that the brand of services, and it's our biggest export as America's biggest export by far, it's going to take a hit as well. So like, it will be really interesting to see. We're talking about contracting or employment of record in offshore, nearshore, LATAM, wherever. It will be really interesting to see how the international geo market, both in services as an export and in our own employee base, on what that looks like, what that means in 6 months. Because I do think that that's going to change, and there's going to be the American brand is definitely taking a hit through this. What
do you mean? Like, say more there.
So buying less McDonald's.
Like, there's 2 sides to it. So one is just on, like, if I'm working to close a deal with a European company, and it's based out of Germany or Denmark, and they have 2 choices. One choice is based in France, and one choice is based in the US. Does that become a part of their decision making?
100% it does.
Exactly right. Yeah. And I think that that's going to be a pretty big fallout, unfortunately, from this, which is a big deal. Even if you're like, oh, I'm not manufacturing anything, why do I care about tariffs? You should.
Well, that's the broader point this has been happening for a while, and we can explore, and everybody can write, thought pieces and essays on why. But the reality is that what this represents fundamentally is the continued retreat of America as the leading superpower in the world. And that's why everybody's talking about this is a formation of a new world order where we don't have all the answers. We don't know how it's going to work. This China is, if I'm not mistaken, China is the biggest holder of our treasuries.
Yeah,
This
might be soon Warren Buffett, though. Who knows?
Like this recalibration will have a widespread impact. And again, my hope, and that's why I'm a globalist. I'll say it. I mean, here I am living in Barcelona. The internet's made us all globalists in a way. And I believe in an interconnected global supply chain because I think it's more efficient. I also think it's more peaceful. I think it does, on the margin, create more likelihood for peace and less armed conflict, which is why we've experienced, since the end of World War II. I mean, there's been Korea and Vietnam, and there's been small skirmishes, but there has not been another world war. And reminder, there were 2 world wars in 20 years at the beginning of the 20th century. So I think the theory of the case from, Trump and the MAGA people is completely wrong when it comes to foreign policy. But whether you think it's right or wrong, the idea of American first nativism means that by definition, like the whole thing is changing, and the brand of America is very different, and I think people used to rely on us. They used to rely on us to be reasonable, to be leaders, even if it was George H.W. Bush or Barack Obama or W. Bush, there was a consistency there. And that consistency means has been thrown out the window. And now you can't count on us. And I do think that impacts people's interest and willingness to buy from us. And I think when we're sitting there talking smack to Europe, and you have a choice between an American product, Quota Path, and Cobra, the French incentive comp platform, maybe on the margin you choose the European vendor.
Yeah.
And it does affect these things. Like when they started having that tension between Canada and the US, there was this significant drop in travel from Canada into the US, like significant, like 60-70% drop of people flying over. And it doesn't take long. It doesn't take long for people to change how they think about things. The last thing I want to talk about is we've discussed a lot of foundation building that is defensive, that enables you to get through these periods. But along the way, we've been touching on the fact that you also want to attack. And we've touched on various ways to do that and even how to think about it. And there's many options that I think are uniquely a company's choices to make. You can attack by doing M&A, like AJ has a lot of dry powder. AJ could go out and buy a company at a really good price. Others can play around with pricing. Some will invest in innovation. Others will, hire people opportunistically, people that they couldn't afford before. Like there are many ways to attack. You will choose what's best for you in your market. But Sam, since you're the profitable, efficient growth guy, give us the principle again. And you've mentioned this earlier in the call, but as we end this, what is the principle for me to keep? What's the formula or principle that helps me make thoughtful bets that are aggressive and in service of growth?
The fundamental principle is measure twice, cut once, I suppose. The fundamental principle is understand the ROI of your existing investments, track them very carefully. If you're thinking about a change, right, what are some of the things that you can do in specific response to changing economic conditions? Well, I mean, there are people out there, and I'm still shocked because this is just not my instinct, but there's people that they do a quarterly forecast and they don't revisit it. So part of profitable, efficient growth is more accurate, more real-time measurement of your financial performance, obviously including cash flow. And then it's proportional tranched investments in growth relative to the data that you have. So if things are working at 1x, doesn't mean go to 3x. If you're spending $30,000 on LinkedIn this month and you're seeing good results, do not go to $90,000 next month. Try $40,000. See what happens. If you see a decline, pull back to $35,000. That is fundamentally profitable, efficient growth. And so the point is, right, why is it? What is the catch? The catch is you will not grow as fast. Yeah, that is the catch.
That's the trade-off.
You will not grow as fast because you are spending money and then waiting to see how it went before you decide to spend more money. And if you are just balls to the wall, then you'll keep going and then you'll get caught off guard. And, Lemkin and other people were saying, hey, the days of efficiency are over. That was, that lasted for like 6 months, from like October 24 to March of 25. But now we're back because uncertainty looks like it's a thing that's here to stay. So the fundamental point is just size your bets. That's it.
AJ, would you add anything to this, or your thoughts on a framework of this sort, or how difficult it is to implement in a business that is venture funded with board members who want an outcome and an exit and venture scale and all these fancy things?
The only thing I would say is I think it's a little bit more nuanced than what Sam's putting out there. Like 30,000, he chose a example of spending 30,000 and then you're going to just triple it to 90,000. I don't think any company out there even 4 years ago was doing potentially
Are you crazy?
that.
Of course they were.
Well, I can only speak from my example of like, yeah, we did spend a lot of money on SaaStr, and I don't think we spent 180K, but we did spend a lot of money out there on SaaStr. But what we really were doing, we were spreading ourselves too thin. We were trying a lot of different things, and a lot of different things takes a lot of different people. And the company was twice as big as it was then. And 80% of your cost capex in a software business is your headcount. And so like that was where we were spending a lot of our dollars and a lot of people trying a lot of different things. I would just say that's like, I don't understand why we were thinking about this in maybe a different way. And so like maybe it's just mindset has changed where that growth of all cost model is that I can't even envision what I would feel or it would need to look like for me to feel like that's the case where I can just light cash on fire.
If you had a sales team of 7 people and you're like, we're hiring 15 people.
Yeah.
Right. And we went from, and that's exactly what we did. We went from 5 to 20 people or 19 people.
That would be that's not profitable, efficient growth.
Right.
The way to do it would be, we've got 5 people that are hitting their number. We're going to add 5 more people and see what happens.
So we're 6 people. We've been hitting our number. We're adding 2 people.
Just for context for the audience, when AJ says they were twice the size that they are today, he's talking about headcount, not revenue. They're way more revenue than they were before.
Right.
Just for context.
We were burning $1.5 million a month.
Back then, we raised a ton, so it's okay. But yes.
Well, then we cut that by a quarter of what that it was.
Ooh, wow.
So, yeah, I mean, and this is the dynamic. And if you're out there, like, this is the dynamic. This is why AJ has problems with his board, because there's people that are like, this isn't what I signed up for. I'm a venture investor. AJ, I need you to spend all $80 million or wherever you raised, and I need you to put everything out there. And if you go out of business, that's fine, because I've got other companies in my portfolio. But
and we're using AJ as a random example, not as exact board. That is the thing. It's pattern matching, and you implement the patterns. And some will work well within it because the product is so great and the pull is there, and others will fall apart.
But if you haven't, and here's the rubber meets the road. If you haven't done the work to understand your retention and GRR when you're investing those dollars in the company, and then the company turns out to have a leaky bucket, which a lot of organizations did, then the question is for the venture, like, we'll go and spend that money. It's like, well, if I haven't fixed this problem, why would we spend money to grow faster? And it becomes this challenge that you have as an operator of like, I've got to fix these problems. I'm not going to do this. Then like, all right, well then what are we doing here? It's like, well, I'm holding strong on this. So that is where boards, and I like, I've talked about my board previously. I've had multiple different partners. Like, we're all aligned to some of the things that we're doing, and that the cost structure of the business today, even though we have a big balance sheet, is the right cost structure for the business. And I'll hold strong on that.
This is a good place to end this episode. Guys, today we're going to do something interesting. Wins and fails. One win, one fail from what's happened around you that you've noticed or within your own businesses. And while you think about it, I'll give you mine. I'll start with a fail. I thought LinkedIn was a mess last week. This is a business social network, and there was a lack of conversations around the number one business story in the world. Sam was talking about it, but there was a lack of conversation about tariffs, what's happening in the market. And this is not against creators on LinkedIn. This is about the people that are optimizing that algorithm. There's some fundamental mistakes that have been made if the most important business story is not being discussed by your creators. They believe that there's no value in discussing it. There's no alpha in doing so. And that's an algorithm product decision that is flawed. There's also become just It feels like a demand generation, like trade show booth at all points, whether it's people writing organically or the ads that are there. It's lost its essence. It was the most beautiful social network in my mind, the one I loved the most, and I'm just sad with the type of decisions that product team has been making recently, and hopefully there's some good changes over there. From a win perspective, on another social network, X, which I know is polarizing, there is a new media company that I think is quite inspiring. It's called TBPN. Everybody should go check them out. They have come up with a new format of show. And it's always nice to see innovation in any space and understand the thinking and the execution behind it. And what they've done is they've chosen one key platform, which is X, and they do a 3-hour live show there. And they have good networks within tech. It's covering the tech market, and they're able to generate these extremely viral clips that then are amplified across the Eds platform. And their growth over the last couple of months is staggering. The quality of guests is amazing. The way they've thought about every little element of positioning, I think, is perfect, like perfect counter positioning. Even if you look at them, when you watch their videos, they have a banner of ads underneath. And that is, they've outwardly said this is counter positioned against All In. All In says, we don't have any ads. We're so rich. We're so cool. And they're like, we don't want to show you we're well sponsored. We're in this for the money, but we don't want to do it stylishly. And I just think they're really cool people, and everybody should check them out.
What is it again? TMPN?
TBPN.
TBPN.
Yeah.
What does it stand for?
No idea.
Fair enough. I'll go next. A win. I went to the American consulate this morning and with my daughter and my partner, and we registered her birth, and she will be an American citizen. Despite everything I said, I'm excited for that. That's cool. And she was well behaved that entire time. I cannot say the same for last night, but generally speaking, she's a good. And I got to send an email to the consulate, and I won't say her name on the show, but it was like I said, her dad, and that was fun.
That's cool.
And then I'm a dad now.
I didn't really think about this, Sam, but your daughter is going to grow up speaking at least 3 languages.
Maybe 4. Maybe Spanish, Catalan, French, and English.
Oh, Catalan.
Oh, wow.
which may delay when she speaks, but we'll see.
Is
that the case?
Yeah, apparently if it's multilingual, then it takes a little bit longer for them to process all the different sounds that they're hearing.
I was one language, but I started speaking after 4, my mother tells me. They were very worried. Now I can't shut up.
Yeah.
I think once, AJ probably knows this, but once you have a child, I think that's just it. You worry for the rest of your life.
I mean, yes. Like, no joke. Yeah. Like, literally, that's all I do is worry about my daughters. One of my daughters is being bullied right now. I worry about her. Another daughter is having social media issues. I worry about her. Yeah, you don't stop. Good luck, Sam.
Yeah.
Nice job. All right.
What's a fail? No, I gotta say
a fail. You got a fail. I didn't think you had a fail.
A fail is the stock market. My ability to retire is a fail this week.
Has been extended by a few years.
American leadership in the world, fail. Over to you, AJ.
I'll start with my fail. The fail is I think we all have these things that are implanted in our head, and we can't let them go, and we want to make decisions as CEOs and just do it and trust our gut to do it. And then when we finally do it, we're like, why didn't we do this a while ago? And so I had a decision that I'd make around some of the organization that I had made like probably 6 months ago, and finally started to make some of the changes and the moves that I wanted to. And I know this is going to turn out the best for the organization. I'm being a little ambiguous because it's org design and sensitivity around people, confidential, whatever. But at the end of the day, it was the right decision. And I'm so frustrated that I didn't make that decision 6 months ago and like didn't have the conviction. So it happens. If you're out there,
so often
you're wrestling with a decision, you know it's the right decision, just go do it. My win of the week is actually the opposite of Sam's. I have not checked my portfolio in the last 2 weeks. I haven't looked at it. Literally have not looked at it a single time. And that's my win of the week. And that's good. That is maybe ever so slightly helping me sleep a little bit better. But I'm just like, whatever. I'm trusting. I have a financial advisor, trusting for him to make the right buys. I don't think about market timing. I'm in it for the long term. So whatever happens, happens. But yeah, I'm very thankful, and I won't be checking it anytime soon.
Well, wishing you the best. And that is the episode, guys.
104. Here we are.
Thanks for listening, everybody. God bless you. Send your hate mail to Asad.
Bye, everyone.
Bye, everyone.
Bye. Thanks for listening to Top Line. New episodes come out every Sunday. If you like what you heard today, subscribe so you never miss an episode, leave a 5-star review, and share it with your friends. Don't forget to join our Top Line Slack channel to connect with us and discuss the topics we cover with other listeners. Click the link in the show notes. Lastly, if you're interested in joining Pavilion, you can learn more about membership at joinpavilion.com/membership. Thanks again for listening.